Hi, everyone, and welcome to today's webinar, Utility Bills, the Silent Hero in Precise Carbon Accounting. My name is Amber Artrip. I'm the Vice President of Marketing here at Energy Cap, and I will be leading today's session. A few housekeeping items before we get started. This webinar is being recorded, so once we're complete, it'll be up and live on energycap.com under our resources section for you to watch anytime you'd like. So let's go ahead and get into today's presentation. So for the agenda today, we'll talk about what carbon accounting is, how to know if your carbon accounting data is financial grade or not, why utility bills play such an important role in financial grade carbon accounting, and then we'll talk about how energy and sustainability software can really help you pull all the pieces together to ensure that your carbon accounting is financial grade. And then we'll open it up for Q&A. So let's start at the top. What is carbon accounting? We've got a great little illustration here to help explain for those of you who maybe are new to the world of carbon accounting. There are at the top greenhouse gas emissions. There's different types of gases. This is just a sample of them. And when we talk about how we report on greenhouse gases, we basically roll everything up into a CO2 equivalent. So that's a carbon equivalent. However, it's important to know there's all different types of greenhouse gases that we are emitting into the atmosphere and that are impacting the climate and impacting climate change. So the whole point of carbon accounting is for organizations to really be transparent about their emissions, what they're emitting into the atmosphere, with the overall goal of being, hey, let's work together to decrease carbon emissions and to decarbonize our operations so that we're doing less harm to our environment. We'll talk a little bit more about the GHG protocol, which is the greenhouse gas protocol, which much of this is based in. But for a high level, there are 3 scopes that we track in carbon accounting. Scope 1 is that purple arrow in the middle there. Those are direct emissions from your organization. You can think of, I like to think of this as like, what are you burning on site at your organization that's directly going into the atmosphere? This is things like burning coal, for example, maybe burning coal at your company facility. I don't know if you're doing that. Or if you have company vehicles, that's another great example. If you're driving a company vehicle around your organization that's emitting direct pollution into the environment, that's scope 1 direct emissions. Over on the left with the green arrow is scope 2 indirect emissions. These are emissions that maybe you're not burning on site for power or electricity or heating or whatever it may be, but that you're purchasing from a utility company, likely, that they are then having to create that energy and emitting carbon into the atmosphere to create that energy for you. So that is your purchase electricity, steam, heat, cooling for your personal use at your organization. Much of this is being tracked with utilities. And then there's scope 3, which is essentially everything else. And there are upstream activities and downstream activities. So things that happen before items, maybe I like to think of a company like Apple. So what are the things that are happening upstream before you build an iPhone? There's, things like business travel, waste generated, transportation of goods to your facility, fuel and energy related activities upstream. And then there's downstream activities like the use of an iPhone or use of products sold or how these products are processed. And how they're transported, right, to the various facilities in which you sell an iPhone. It can also include things like leased assets, leased buildings, different investments and franchises, you name it. We've got a lot of different, what we call scope categories here. So ways of tracking scope emissions. There are 15 different scope categories. We'll talk a little bit more about that later. Here's the GHG protocol. So for most reporting frameworks, the GHG protocol is the standardized framework that we use to measure and manage greenhouse gas emissions. So you can look this up online. There's a link there, ghgprotocol.org. You can see there's lots of standards, guidance, tools, and training for businesses and organizations and governments who are looking to measure and manage their emissions. So go ahead and check it out. It's been around for a long time. It's widely used and accepted, and it's really the main framework. It's also the framework that we've built all of Energy Cap's greenhouse gas emissions reporting structures based on. So all of this to say, is your data financial grade? So you may be early in your journey and you're just starting to pull together your emissions data, or maybe you've been reporting your emissions data to regulations and different reporting frameworks for a while. Either way, I'm going to ask the critical question: how confident are you in the financial grade accuracy of your data? I pulled together this little chart to help us understand. We know there's 15 different scope categories, but how hard or how easy and how available are the data points in those 15 scope categories? How easy are they to access? So we've kind of plotted on a chart here. If we looked at all 15 scope categories, what is most readily available and what is not so readily available, maybe some limited availability, what's easier to measure and what's harder to measure. It's really all over the board. There are some emission types that are quite easy to capture, things like business travel, for example. Oftentimes you'll have maybe like a Expensify or Concur, where you can easily track at least the cost of your business travel. And purchase electricity, we talked about, is usually in the form of utilities providing that information. And so utility bills are ubiquitous because they come pretty regularly on a 30-day, 25-day cadence. And they're easy to measure because they've got all of the line items oftentimes that you need for reporting. But then some are quite hard to track, like the use of sold products. Once you ship an iPhone out the door, how are you tracking the use of that item? You have to make quite a bit of assumptions or do some surveying, et cetera, to capture that information. So all this to say, some are easier to measure, some are harder to measure, some are more available, and some are less available. We'll get more into this in a second. But why is it important? Why is it important that we have financial grade data? So I wanted to pull together some analysis from 3 of the pending pieces of legislation around the globe that are going to require different things from us as reporting organizations. So you may have heard of these, or you may not have heard of these, and that's okay. I'll give you a little overview. CSRD is a reporting mandate in Europe requiring public and private companies starting in 2025 to report on scope 1, 2, and 3 emissions. The SEC is US based, so it's public companies in the United States of America will be, when the law passes. It's on hold right now, but when the SEC is adamant in standing by the legislation, so when it does pass, it's going to require scope 1 and 2 emissions reporting, and in some cases, scope 3 of material. And then, of course, there's legislation in California for public and private companies over a certain size that do business in California, starting in 2026, that will require scope 1, 2, and 3 emissions of material. What's really important to note here is at the bottom, the assurance requirements. There, across all 3 of these regulations, there is limited and reasonable assurance requirements. What does this mean? Reasonable assurance means that you will have to have your data audited by an auditor, a third party, and they will need to affirm that the information in your carbon emissions reporting is materially correct. That is the limited and reasonable assurance. So based on how you're doing your emissions reporting today, or if you're planning for pulling your emissions reporting together, how confident are you that a third party can come in and validate the accuracy and affirm that the information you're providing is materially correct? So let's talk about the journey from where we're at today, where many people are at today, and where the industry is headed. So there's an evolution happening right now from managing emissions data in spreadsheets to managing this data in software. And we're going to talk a little bit about why this is happening. So what's the status quo, and what a lot of people have been doing is manually taking utility bills, meter reads, data collection across all 15 scope categories, and pulling that information together in spreadsheets and applying emissions calculations to that data. Oftentimes it happens annually. Why? Because we report annually, so that makes sense. But having this data in spreadsheets is difficult. It can make it difficult to access. There's definitely a higher chance of error. The data is often in silos, and I'll be honest, it's usually consultants who are pulling this data together. And as you know, someone who's operating as a sustainability leader at a certain organization, you may be very dependent on the consultants to even access this data. So there's a lot of silos that are created, which makes it hard to maintain and update, not to mention the manual labor required just to pull all of this data in. And what I think is most interesting is it creates reactive reporting. We're doing this reporting once a year. Are we really doing anything to decarbonize our operations if we're spending all of our time pulling together data for an annual report? Probably not. So that's where software can help us come in and save us a ton of time and money, because software can automatically capture this data. It is inherently auditable and time-stamped in financial grade. We can track the different calculations used over time and timestamp those calculations. It enables real-time updates. You can log in at any time and see how you're pacing towards your decarbonization goals. It reduces and nearly eliminates that manual labor requirement of pulling together the data. It definitely reduces error across the organization, creates better collaboration, and really enables you to scale the decarbonization efforts at your company or organization. And what I think is most importantly is it gives you that time back to take the effort of pulling all this data together and really analyze it to better monitor and respond to anomalies in data, to energy hogs in your operations in real time. And I think that's really where we need to get. I think reporting for the sake of reporting is not going to help us mitigate climate change. We really need to take action. And I really believe that software creates more opportunities for us to take action in our organizations for decarbonization. So what are the things you need to look at when you're thinking, hey, is my emissions data financial grade? I pulled this directly from Verdantix. They are an amazing industry analyst, and they've pulled together some things that you should, characteristics that you should consider when thinking of your financial grade data. So is your data accurate? How confident do you feel? Would you share that data with the CEO or the CFO for that purpose? Is it auditable? Are you consistently capturing a paper trail of changes and calculation engines for auditable data and data collection process? Is it time relevant? Are you pulling this data once a year? Is the data you're showing me 12 years old, or sorry, 12 months old, or is it a month old, right? And what is the timeliness of that data for decision making? And finally, automation. Being able to automatically collect data from the source is critical for financial grade. So let's get into the fun part here. Why are utility bills the silent hero? I pulled this directly from the GHG protocol. They state that nearly 40% of global GHG emissions are due to energy generation, and half of that is used by industrial or commercial entities. What does that mean? Well, if I look here at our fun little illustration, right there, scope 2, generated energy, 40% of global emissions can be directly related to scope 2 indirect emissions. This is creating a huge opportunity for us 40% of emissions. And if you are a commercial or industrial organization, it may even be more. This creates a huge opportunity for us to take a good look at our Scope 2 data and prioritize it from a carbon accounting perspective to help us decarbonize that particular area. We can make a really big difference. Oops. So back to this chart here, when we're looking at the collection of emissions data, what is also interesting and why utility data bubbles to the top as the silent hero is that utility data is also ubiquitous and easier to measure. It's readily available, it comes on a monthly cadence, and it gives you and it provides all the line items you need for GHG emissions reporting. So it's a huge opportunity. But again, I asked the question, how confident are you in your utility data? Are you taking your utility bills and taking them for the absolute truth, or are you looking critically at your data? Well, Energy Cap, this is where we come in. We've been in business for 40 years, and really our bread and butter is perfecting utility bill data and utility bill data management. And we have found that there are 3 types of billionaires that really haven't changed over the last 40 years when we look at utility bills across our entire client base. And that can be anything from account ownership. So maybe you're paying a utility bill that really shouldn't be owned by your account. And maybe something, didn't get transferred over correctly in the past, and you've been paying a bill for a neighbor for the last 20 years. Who knows? Missing bill data is a big one that we help customers identify, and duplicate bills. You'd be surprised how many duplicate bills we help customers find. We'll show you a little bit more here. So all of this, 40 plus years of utility bill auditing, we've uncovered that utility companies are not perfect and mistakes do happen. And I'll be honest, they happen a lot. And often it's not anyone's fault. It's just, accounting personnel really care about paying bills on time. They don't want to have late payments. So they are maybe not looking critically at the bill line items, and they're just processing them through, approving them through to get them paid so they don't get a late fee. But here's what we find. Customers who are using Energy Cap, and we have applied a laundry list of different audits and algorithms and data searches to help flag issues on bills, potential issues on bills. We find that 1 in 16 bills of our customers are flagged for possible issues. Of those 1 in 16, 55% of them resulted in action being taken, meaning that over half of those potential issues are actual issues that needed to be further looked at. And we found over 100,000 duplicate bills flagged in our system, which is insane. All this to say, if you're trusting your utility bill for what it is on the piece of paper, it's probably not perfect. It's probably not accurate. And you may be reporting the wrong emissions data if you're using that as the true source of your emissions calculations. And there's also a lot of money to be saved. So we've helped customers. We flagged over $166 million of flagged bills were voided thanks to Energy Cap helping our customers identify these issues in their bills. And that means these are specific cases where customers found problematic bills. They were able to work with the utilities to cancel those bills, and they didn't have to pay them, right? So finding dollars within your bill issues and bill errors. So there's lots of things to consider, not only when it comes to emissions, but also, hey, there's some money there that we can save. And maybe we can put that money towards other decarbonization projects. So let's talk about software coming into the picture and how it can help. How can you prepare for these different regulations and the need to be audit ready? You can install energy and sustainability software. What is this going to do? This is going to help you pull all of your energy and sustainability data. I'm talking utility bills, facility information, transportation information, operational facility data, supplier data, all of those little data points that we looked at, whatever is material to your business, you can integrate and pull that data into a software platform that will be the single source of truth for you to track all of your energy and sustainability data across your organization. At Energy Cap, we do this in a very particular way where we capture that information and then we allocate it. So you may, one of the important things you need to think about is how do you want to structure your data? Do you want to report on buildings? Do you want to report on maybe utility accounts? Do you want to report on carbon emissions and your 15 scope categories? We take that data and we help you allocate it in a way that makes sense for your particular use case, in a way that makes sense for your organization. That's really a big differentiator in who we are and what we do. Then we take that data once allocated and we analyze it. This is where we run the audits. We ensure that it's valid and accurate, and we help you identify any anomalies in that data, maybe identify some energy hogs and areas for improvement and operational efficiency. And then we make it super easy for you to report on that data that you can trust is accurate and auditable. How do we do this? Here's a little plug for Energy Cap. We are an energy and sustainability ERP. What does ERP mean? It's Enterprise Resource Planning Tool. This really means that we are at our core financial grade because of the accuracy and audits that we apply to our data. You can trust that we are that financial grade source of truth and that single source of truth for all of your energy and sustainability data. The two tools that I will highlight today in our platform are Carbon Hub, which is our carbon accounting platform, and Utility Management, which is our utility bill data platform. The two of these tools work really well together for a streamlined, financial grade, auditable emissions reporting use case. We also have capture services there at the bottom. So imagine you have a ton of utility bills coming in each month and you don't want to have to deal with those. You don't ever want to touch a bill again. We can process your utility bills for you on your behalf and ensure the accuracy, ensure the auditability of those, of that data for you. We also have a tool on the right I'll just touch on for a minute called Smart Analytics, which is the ability to dive deep into real-time energy and sustainability data to respond quickly. So when we talk about really decarbonizing our operations, that is the tool that can help you do that. But we're going to dig into utility management and Carbon Hub first. So it all starts with capturing utility bills accurately. There's lots of ways that you can do this. You can manually enter bills in, which is probably what you're doing today if you're doing spreadsheets. But instead of entering them into a spreadsheet, you can enter them into the software and have that data in the system and accurate. And we can also instead, what makes a difference of having it in a software is you can apply then the audits once the data is input. We also make it easy to batch import. If you have a spreadsheet that you just want to import into the software, you can do it that way. And then at the bottom there, the bill images, EDI, Excel, XML, but this is our bill capture service that if you choose, you can also use to get your bill data into Energy Cap. Let's talk about the audits that we run. So you can see here, there's a slew of audits that we run, and you can control how you want these audits to behave on your data. So we check for things like duplicate bills, repeat invoice numbers, gaps in bill data, overlapping bills, you name it. And what we are running these checks is to validate usage, catch any duplicates, identify gaps in your data, help identify anomalies in cost and usage and demand over time, and so many more, so many other use cases just to help you ensure that your data is accurate and audit proof. Once you have your data in the system, this is where it will we'll want to start applying carbon calculations to that data. So the beautiful thing about using Energy Cap for utility and carbon data is that you get to pull from pull from the utility bills and automatically apply carbon calculations to that data. And then you can also add in additional scope 3 emissions data so that you can view everything all in one place at the building, meter, or organization level, you name it. You can apply these automatic GHG conversions. You can control what types of calculations you would like to use on each meter and each emission type. These are custom and date effective GHG factors, and we have thousands of factors already baked into the platform for you to choose from. We'll even help you by starting out saying, hey, based on your location, we recommend you use this particular factor, but you can go in and update that to meet your needs. Easy emissions data entry and factor search tools are available in Carbon Hub. You can manage your GHG factors in bulk. And as I mentioned, you can set and define default GHG factors per resource. I think what's really interesting here is we do have a database of factors already baked into Energy Cap and into Carbon Hub. But I think what's really important is for some more advanced use cases, you need custom factors. You need, you may have you're maybe purchasing from a utility that has a very specific fuel mix that you want to track, and the localized factors aren't good enough to meet that. And so you can set and create custom market-based factors in Carbon Hub. And all of that, I think what the really beautiful thing is, all of that is time-stamped and auditable. So you can go at any point in time and say, hey, on this particular meter, what factor was I using at this particular point in time? And when did we change that factor to a market-based factor? All of that will be logged and time-stamped in the system. You also get a dedicated sustainability hierarchy. So depending on how you want to report on your carbon, maybe you want to organize it by offices. Maybe you want to just keep it organized by a different scope category. It's extremely flexible so that you can organize data however it makes the most sense for you and for your business. And what's really cool too is we have specific views for accountants and energy managers. Energy managers may want to view the data by facility, but accountants may want to view the data by accounts, utility accounts, for example. But sustainability leaders may want to view the data by scope category. What the beautiful thing is, everyone can have a hierarchy that works for them, where they can find the data easily in the way that they want it organized. But what's really great is that they're all utilizing the same core data set as the foundation for the reporting, which if we were doing this in spreadsheets, you would not be as confident in. So this is a really exciting and valuable part of having your information in software platform. Here's just a few examples of some of the charts and dashboards we make available in the platform. We also make these available in what we call dashboards that are customizable and shareable. So you can create different versions of dashboards for different audiences. Maybe you have a executive audience that just wants to see the high level reduction, and maybe you have an energy manager audience that wants a little bit of a deeper dive into the specifics of the energy consumption. You can easily create different dashboards and different views for different audiences and easily share that by simply copying a URL and providing the URL. There's no login access needed to view these if you make them public. You can also even embed these dashboards into your public websites. If our K-12 and government clients really love this feature because you've got taxpayers and students and parents, stakeholders who want to see what's going on and they're invested. So you can easily make these available on your public website. And that's it. That's all we've got for today. If you are interested in learning more about Energy Cap, we can provide you some demo links for you to go and try our platform for free and kind of poke around and see if it's something that may be helpful for you, both utility management and Carbon Hub. But I want to thank you all for coming today and for giving us your time. And if you have any questions about your emissions data and how you can ensure the auditability of your emissions data and the financial grade nature of your emissions reporting, reach out to us, energycap.com. Submit a contact us form or a demo request. We'd love to talk to you. Thank you again, and I hope you have a great day.